Hey everybody, morning. How's it going? Welcome to the show. Hey Kimberly, my favorite subscribers here, and I'm in Jacksonville today and this week, at least for today and tomorrow and Wednesday, and things are a little different. Different setup, different everything. I'll do my best to do the normal show as good as I can, but I make no promises that it will not have hiccups. If I get disconnected or the show ends abruptly, I apologize. I'm on internet by other people. It's not my normal setup, so do the best I can here. And welcome, my magnificent morning monsters. Welcome to the show. And we're going to try to talk about last week. Dow ending at 50,000. And we have this SaaSpocalypse thing that presents opportunity, I guess. So, welcome to the show. You know, for the first time in history, we saw Dow over 50,000 and pop the champagne, hold on to your party hats because, well, the grown ups at Dow were having a big party. Maybe a quiet dinner party, maybe a rager. The kids in the tech world having a full blown lights out, no parents home meltdown, burn the neighborhood down type of situation. I mean, Goldman Sachs calls it Adult Swim and then some. I've been calling it the SaaSpocalypse. I think the social media has called it the SaaSpocalypse. That's software as a service apocalypse, right? Just absolute crazy. So imagine you own a company that sells really expensive shovels. You've been selling these shovels for years. You actually have a subscription model for the shovels. Anybody who's digging, the business and stuff like that, uses your shovels. Life's good. And then one day, a guy from a company called Anthropic, let's call him the AI prophet, stands up in a fancy conference and says, "Hey, everybody, it's about 6 to 12 months away, but you won't need shovels anymore. We invented magic dirt eating worms that is going to do all your digging for you for free." And then to prove the point, Google unleashes a genie out of a magic lamp that can conjure up an entire interactive world of magic worms that eat dirt. And just from a simple wish that you could dig dirt faster. And that, my friends, is what happened in the software as a service or SaaS industry the last couple of weeks. Now, for years, these companies have been selling us subscriptions to their software. It seems like everything has a subscription these days. Everything. And it seems like you can't buy a piece of software anymore. You have to subscribe. And now these AI prophets are telling us that we can just create our own software with our own tools, with a few simple sentences. And the market, in its infinite wisdom, reacted by taking about $1 trillion out of the software sector and lighting it on absolute fire. I mean, Amazon, Microsoft, the darlings of the post-pandemic world, got taken out to the woodshed, punched in the face. Microsoft's down 30% off the all-time high, erasing the gains it made since the launch of ChatGPT, basically. I mean, it's like the market suddenly realized that the emperor of the software world is walking around with no clothes whatsoever. So where did all the money go? Did it flow somewhere? Did it vanish into thin air? I mean, did it just completely vaporize? And I have to say no. Investors are not cashing out. They're not moving their money to a different neighborhood. I mean, they are moving their money to a different neighborhood. It is sector rotation. It's rotating out of this high-tech, fancy software as a service stuff, AI vulnerable mansions, if you will, into the steady, sturdy brick and mortar houses of actual real economy. I mean, we're talking about materials, energy, industrials, companies that make stuff and make good stuff. The ones that actually benefit from this AI boom because guess what? All those AI data centers, they need a bunch of electricity. They need stuff, real stuff, to actually build the place they're going to run. Goldman Sachs, in a moment of clarity, added a few names to their high conviction list that tells the story perfectly. Interesting. They like DoorDash, which is morphing from a food delivery app into a full-blown e-commerce platform. They like ServiceNow, even though beat down, which provides digital plumbing for large corporations. A business that's a lot harder for AI to disrupt than maybe it first seems. And they like the Golar LNG. GLNG is the ticker, a company that operates floating liquefied natural gas platforms. Because, again, when you need energy, the easiest way to get it right now is to burn some natural gas in a turbine and generate some electricity. And then there's Bitcoin. Oh, Bitcoin took a terrifying nosedive all the way down to 60,000, triggering a massive wave of liquidations, only to get shot out of a cannon right back up to about 70,000 in a single day. And this morning down just a little bit, but it's a classic short squeeze type of situation. When everybody's shorting, then you shoot it right back up. I mean, might end up being a dead cat bounce. Be careful now. We call it a dead cat bounce when it bounces for a day or so, and then right back to the lows. And it's a reminder that in the crypto world, the house always wins, and the house is pure, is powered by pure, unadulterated chaos. So chaos always wins in this market. And just to throw a wrench in the works, we have the new Fed chairman on the horizon, Kevin Warsh, announced he's not a fan of printing money, actually. The moment his name was announced, gold took a 9% haircut. Maybe that was just kind of coincidence. Maybe not. I don't know. The market is telling us that the days of easy money might be over. Maybe. I don't know. At least people think it might be. So the key takeaway from all this madness over the last week, or I mean, it feels like a year in a week, the AI revolution, it's not a drill. It's here. These agents are real. They do real things, and they replace real subscriptions that people might have to buy with AI-powered stuff. I ordered a Mac Studio. It's going to be here. Well, it'll be at my office on Wednesday. When I get home on Thursday, I'm going to start rolling out my own AI agents. Try to help me do this stuff I do right here. And I look at it more like a 24/7 employee. Except it can build me anything I want. That's just crazy that that's the way we're going. And it's here right now. In fact, I drove to Jacksonville. I didn't touch the steering wheel. I pushed the button on my truck, got in, pushed the button. It drove me to the charging stop. I got out, plugged it in, charged up, unplugged it, put the cord back up, got back in, pushed the button. We go to the next charging stop. I didn't drive. All 600 and whatever miles down here, I didn't drive. The craziest freaking thing. It blew my mind. Blew my mind. I'll have a video about it probably in a week, maybe. I don't know. I got to get home, make the video. But I recorded it stopping, it driving, it charging. I mean, it merging through traffic in Atlanta. I mean, it was the craziest freaking thing. This AI stuff is here. Self-driving cars are here. You can buy one. You can own one. You don't have to go to Austin to ride in a cybercab. You can ride in it now. I mean, the software world is in for a painful reckoning. You don't have to be bound by the decisions that software companies have made. You can just make your own with these AI agents and stuff. But that doesn't mean that all of it's going away. There's still a big barrier to telling your AI agent you want to do something like Adobe Photoshop and then actually having something built like Photoshop. That's a big difference. Adobe's got years of knowledge, patents, all sorts of stuff. So don't necessarily pack up your bags and hide in a bunker. But you need to be smart about this. You need to look for companies that provide actual value, that have things that can't easily be replicated. Or in this case, energy and infrastructure for this AI gold rush. You need to look at value. The market is obsessed with growth right now. And you need to remember that when everybody else is panicking, that's where real opportunities emerge. So stay frosty, my friends. That's it for the monologue. We'll dive into some charts, try to figure out what's going on today. And welcome, everybody. If you're new here, make sure you subscribe and jump in to the chat. I am on location this week, at least Monday, Tuesday, Wednesday. So the show's a little different than normal. Make sure you come back for more. And I guess, let's see, try to share my screen and do all this stuff here. And all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you need somebody to tell you what to do, there's people you can hire, but let's be honest. You just kind of learn to do this stuff yourself. You'll do way better out there. And look at our list. It's not a huge list this morning. Looking at ES overnight, like I said, I'll try to do the best I can here. Let's see, where do we opened up with a small gap up, and we've bled it back down, fill in the gap. Beautiful, nothing burger as we come into the day. Looking at NQ, same kind of price action. We're holding the 15-minute roadmap line. If we can hold here, it's like the 15-minute, the 30-minute, probably the 1 hour, all in the same. 1 hour is just a little above us, all in the same vicinity. So, want to see that poke through if we're going higher, but right now, the higher time frame is kind of saying this is a downtrend. Now, one thing to note here, the NASDAQ did push down into the daily roadmap line on the futures, NASDAQ futures. This is NASDAQ, NQ is NASDAQ futures. And NDX, excuse me, I have a laptop, so I have to actually type on the thing with the screen. And NDX touched the daily right here. So as we come into the open here in a couple minutes, we'll see if this, we're probably going to be right below the high there with the pullback this morning. Maybe right in even with it. But we want to see this hold and bounce higher. Now, SPX didn't touch the daily. Didn't even come close. It's way down here. We got a large bounce. I don't know. As long as we're in the vicinity here of this 618, that can be a first move down, a retrace, and a next move down. Though we did touch the zone I thought we would touch before we bounce. So we're going to watch real carefully right here what happens right in this zone. I think, there's my drawing tool. Thought I had it on here. We've got to watch this zone right here carefully and see if we can hold that. If we do and put downward pressure, break back below the low, we're coming, more than likely coming down to the daily roadmap line there. So that's what to watch on the S&P this week, really. So, yeah. I was like, where's the calendar? I don't have the calendar up right now. And let's see if I can get that tab up later on. So Russell broke down, went all the way down to, look at that reaction off the bottom there. Very strong. So we ripped down, head and shoulders pattern, right to the target, bounced right back up to the uptrend of lows. If we can break through that, probably going up to that 3100, 3140 target up here. Excuse me. If we maintain under that, push back through the lows, probably coming down to the daily roadmap line right there. That'll be what I expect to happen. And let's see. Oil still in the zone. Still in the zone. Auto zone. Getting a lot of alerts. Market must have just opened. Yeah. A little bit of red on S&P. Down 20 points. So oil, still the same thing we've had for weeks. We've got support right there at the roadmap line. You don't have the roadmap line, check out the channel homepage. You can watch the video that's pinned to the homepage after this and get all the code and install this thing. I even walk through like how it works basically. And if you're just like, I'm not somebody that codes, I don't code, is beyond me, that's cool too. I mean, you have AI that can help walk you through it. But if you need help beyond that, I have an easy button. You can just click it and put it on your chart. It's like $5 though. I do charge for that because I put extra effort into it. So there you go. All right. So oil, roadmap line, and then bottom of this box down here. That's support. Resistance is the top of this candle from back here on January 29th. God, it seems like forever ago, but it was just like a week ago or 9 days, 10, 11 days ago. Anyway, Crazy, crazy. And gold resistance right here. Resistance right in here. If we turn down off of that, probably going to go down to the daily roadmap line. But we can shoot on up a bit higher. This can come up on up to 5,300 right there. And if you're in the gold trade, it's pretty much going to be done here in about an hour. So watch for a good exit. Don't let it get away from you. Profit's probably not as great as we hoped, but it might be a little bit. So Bitcoin. It's just been at a pause. It has opportunity to bounce here. I kind of expect this to maybe grind higher through June. And this could kind of do this, maybe back up into this area, 90 to 115,000. I talked about that quite a bit. If you missed it last week, go check out Tuesday's show, I think it is. So we've got information there. I don't have it. I just can't pop it up right now. I don't have that set up like I normally do. So I apologize. Then Ethereum looks pretty nasty here. We need to bounce and hold this low if we're going back to highs. Otherwise, this can very quickly erode into a lower low situation than we had back here in 2022. That's not good. No bueno if you're long Ethereum. The use cases keep increasing. The fundamental reasons for it to go higher keep ramping up, but this chart tells me a different story. It tells me a story of going lower. So definitely be careful there. Dollar. Zoom her up, Buttercup. Rejected as expected. And we might be cruising for a lower low. Went a little higher than I thought we might go, but the roadmap line was the ultimate resistance here. We did overlap briefly, but we were rejected quickly. Small overlaps, somewhat okay. Not the cleanest price action, but right now this looks like we could push on down. That should push gold, silver higher, commodities, but correlated when they're correlated, not when they're not. If everything's getting sold, everything's getting sold. And then NKD popped up. Wow, look at that pop this morning. All the way to 58 and then rejecting back down. Holy moly, that almost got to that upper $60,000 target. Wow. That's pretty spicy. So watch out for this. This is going to correct at some point. And NKD, this is the Japanese stock market. When it does corrections, it brings it in a big way. So after this run, I'm starting to get cautious here. If we actually tag that $60,000 to $62,000 area, this thing might take a bigger swing down. And it might be pretty vicious. We might lose 30% very quickly, a couple days. And that's not going to stay just isolated to Japanese stock market. It's going to spill over in the U.S. markets. So be careful on that one. Apple, what's up? Apple Dumpling, what's crack-a-lackin'? We're set to break on up to 295. Now, this could retrace back down here. Could do like Amazon and absolutely fail out. But this is a potential bigger bounce on Amazon. I talked about this on the Market Master show last week, that this pullback into this vicinity, while it could have a little bit lower to go here before it completely finishes up, this is kind of the pattern that I like to see for a measured bounce. It kind of converted from a daily roadmap bounce into a measured bounce. And measured bounces have bigger upside targets, but they're less likely to work. So we need to see continuation back above the daily roadmap line to get this thing to push up. Now, what kind of target does this set us up for? It sets us up for a bigger one, like I said, but what does that mean? Grab the 3-point tool, go off the low from back in April 25 to the high we made back here in November to this current low we just made on earnings. And that sets us up for a rally up into like the 400 area up here, which is pretty crazy, but not all that crazy because of this pattern. The move up, the retrace, but we do need to get continuation. We do need to see that. So I need more to the upside. I gotta turn off this. And one other thing to note, when I do put this on, yeah, we're in, that 618 is just a little bit lower, but that was a 1, 2, 3 ABC type move down, holding right at the 618. We could poke a little bit lower into it. And remember, it can drag its feet, kind of like Meta has dragged its feet. But that was the ABC right down in there. If we hold that, sets us up for potential like 429. 320 is the kind of the bearish target up there. It's pretty crazy going from 200 to 300, possibly 400. I mean, that's a double potential on Amazon. So I'm not super hopeful, but yeah. And I do requests on Tuesday, tomorrow night, 5 p.m. Eastern. I will try to do requests for you. If I can make everything work, I plan to do it. So I don't usually hit the euro. I might be able to fit that in here, but I don't. That's not usually one I cover. Now, Google, retrace a little bit, holding into this consolidation. As long as we hold this 304 area, this fib line where we bottomed out over here, I expect it to go on up to 385. We're on through Meta. If we can hold on to this 618 and the roadmap line, break back higher. As long as we don't break down, I expect this to continue on up to 1100 to 1300. That's the upside potential here. It's probably not going fast. It's probably going to take a couple of years. Could be well into next year or even 28 before we get up there. But 1100 to 1300 is the upside target for Meta. And the climb speed that we usually run on, that would put us out well into 27 at the minimum out here. Microsoft decided to go on deeper, trying to find its footing here. This could have been the low. This retrace, very similar to what Meta did originally, right down here. We need a move up on a retrace to prove that this low is in place. So this could rally back to the daily roadmap line, somewhere around 467. Retrace again before we push on out. That's similar to what UNH is doing too. And we moved up, we hit the roadmap line, we retraced, we're holding, and potential for a bigger upside on UNH. So same pattern, same measured bounce thing, same as like Amazon did now. Amazon potentially has just a little bit lower to go to really firm it up, but these are powerful and could lead to a next very large move higher out there. So I really like that that's showing up in the charts. NVIDIA still stuck between the 195 upside resistance and this roadmap line down around 170. And if we poke down through it, through the supports, we're going to cruise on down to this 150 retest where we broke out of back here. And Tesla holding on to the roadmap line really well. Different pattern completely than most of the rest of the Mag 7s. This has potential to rip. This was the dip. I kind of speculated that we might see a dip and a rip off of earnings. The dip in place. The rip, we're still waiting for it. The rip may never come, but that's what I thought we would see. And I need to get going. This can easily take us from, with this pullback that we've got in place now, we can easily pop up into the 520 to 550 area. Running the fib line here. Got the high, we got that low. 517, 534, even 583. So that would be, and then the bigger pullback we did last year sets us up for like 550, 600, even higher. So let's go Tesla. Let's get her going. And then Netflix pushing to, the longer this screws around under this box I drew with the lows back here from early last year, 25, the longer we mess around right here, the more likely this is to dip on down to the 60 to 70 area right down here in a swooped fashion. And it could mess around right here until next earnings and then take a bath. So Nothing confirming a bottom in Netflix right now. And let's see. So I go pull gainers. That's things moving up $2 or more in the pre-markets. Put on my gainers list. I go pull decliners. Things moving down $2 or more in the pre-market. Put on the decliners list. And try to hunt for some opportunities in here. Hood. That's one I got involved in. That was another ABC potential bounce complete. This is set for a potential run back up to like 170, maybe even like 300 if it, for the really spicy target up here. 250, 300. That would be really spicy to see. But if you look at what it did off this last consolidation and this run, it did that same run, same consolidation, same run before. So this run, if we take off in the same run once again, that's where that 300 comes from. So 170, safer target, but 300. That's just, it's just wild right there. That potentially can play out on Robinhood. I went ahead and sold puts in some accounts of mine last week. We do have earnings coming up this week on tomorrow after the close. So the earnings play is juicy. I played down in here in the 75, 76 area, maybe even up to 79. So you can choose your own adventure here. This could dip on down, but this looks like the bottom's in place. The correction is the same size as we've seen before. And the upside potential, if we just copy upside that we've done before, I like it. I like this play. I got involved. I didn't buy shares. I just sold puts. And if we dip again, I will buy those shares for this bigger upside potential. And let's see other things that might be in here. Okay, wow, look at that pop on Kroger. Holy moly. Looks like Kroger is ripping on out here. Let's delete a couple things. Got this high. We got this low. Oh yeah. If we close above this 618 today, 77 target on Kroger. It's a pretty nice one. Datadog looks pretty bad. Software as a service. And 2x leverage. MVO just keeps getting hit. Although news came out on Friday after the close, I believe it was, about HIMSS. The FDA announced that they were going to go after HIMSS if they didn't stop selling their copycat pill for GLP-1 drugs, their compounded copycat pill that they're not authorized to produce. And they announced they were going to shut that down immediately. So HIMSS getting punched in the face on that news. That looks pretty rough on the chart, quite honestly. I'm not sure. That can take it all the way back down if it fails out here. So that was good news for NVO, bad news for HIMSS, and Lilly, I think, stayed. Yeah, I guess it was good news for Lilly too, but kind of agnostic. Hadn't really, it's already set for a bounce up to 1279. So NVO looks like it may have found support with that news, but it's hard to say for sure. Of course, we got to get above the daily roadmap line to indicate where the bottom's in place. But I like the potential here that this, we kind of triple bottomed here, and that could be the that lowest low right there could be it. It could be a inverse head and shoulders type situation. Right there. And that rip on a breakout could take us up into the 95 area. While it's not all-time highs, that's a substantial retrace from 50 to 95. And that would put us right into that gap down area right there, if that played out. So no guarantees there. We do have that other gap down right here that can provide resistance also. So that's what we got on NVO. And Physical silver. Looks like we're coming back to the roadmap line. ONDO. 2x leverage. SBIT. Ripped. This is leverage short Bitcoin. If you expect Bitcoin to drop some more, there you go. But I think this is going to erode quickly back down. WULF. 2x long. It's kind of bleeding down. Be careful on that. Be careful on all those leverage. I don't have my little buttons to push and pop up, but be careful on these. Winter. Well, that looks good for today, but be careful. MSTR showing signs of potential bottom here. That was the lower target, and we actually pushed below it and came back up. So this can very, very easily, after this kind of down push, could very easily short squeeze, relief rally back up into this 200, 220, maybe 250 area, and then still get downside. But that can rip anything that you're short with leverage, because that's almost 100% climb from here on MSTR. Like I talked about, HIM's already getting hit on the news. FDA stuff. I always warn about that. Like, the Food and Drug Administration can just come in and wreck your freaking business when you're in the medical field. And that's what happened here. Food and Drug Administration stepped in, put the smack down on them, and their stock price suffering because of that. Intuit finding supports, right in the support zone. Be careful. Watch for the bounce. Can be very swift. This can be support and TR. Let's see, WDC. Apparently it was on the decliners list. Now we're back to popping. I think it's just a beast. Coinbase. Their Super Bowl commercial last night, absolute horrible. I was like, what the? I was like, they didn't do themselves any service. I certainly didn't spend any money on production value. So, yeah, just, I was just like, what the? I was like, whoever, before I found out it was Coinbase, I was like, whoever's commercial this is really cheaped out on the production. And then, like, it got to the Coinbase thing. I was like, well, no wonder their stock price is down. I was like, low effort. Anyway, they probably thought it was the best commercial ever. No. Natural gas, looks like it's getting beat down a little bit. PPLT coming back down. Physical platinum. Let's see, how's PALL doing? And coming back down. Looks like we're going to retest support on a lot of these precious metal charts. Silver, gold, platinum, palladium. They're going to be opportunities, but looks like we're pulling back right now. ARM, still churning in here. We're under, haven't played out the head and shoulders all the way, and we're under supports. Or under resistance, I guess you might say. Downtrend, chopping sideways. They don't actually make anything. They just advise people on how to, license their technology and stuff like that. So, guess we'll see there. Yeah, the Coinbase commercial was bad, Kimberly. Yeah, it was. It was horrible. Like, it was really bad. I was just like, anyway. Expand energy. For energy, this looks like it's just chopping in here, and that's no trend. I tend to stay out of it when there's no trend. All right, setups. I have like 30 setups here today, so let's go ahead and get into those. Let's try to find some opportunity here. Talk about this. So the way this works, this is the roadmap bounce pattern on the daily charts. These are stocks that they're not necessarily all trending. My tool finds things that have made a high, made a low, bounced off the roadmap line, and set up a close above the 618, but it's not very discerning. It finds everything that kind of matches this pattern. I put it on the list, and then I dig through and kind of find the ones that I like or have good statistics. Remember, if you have less than 16 trades, less than 30 trades, it is not a statistical population. 30 trades is the minimum. The more, the better, as far as figuring out a statistical population. But you know, it is what it is. You can't read into these. So I've tested tens of thousands of them. The average profitable is 75%, and the average profit factor over here is 1.2. And I'm giving a presentation today during the in-person event about how to backtest and how to build stuff like this to find statistics on patterns in the market. So if you're a all access Diamond Club type member, Terminal Trading Lab member, we'll have that presentation. I'll share the slides in Discord later on today too. Got a few more things to clean up on that, but I'm going to talk about that today. And I think it can be really powerful for everybody to actually put numbers behind ideas you have in the market. So AAL has this bounce, target 17, stop is always dollar below the low. This is lower price stuff. Be careful out there on American Airlines. ALB, now this one has a bigger bounce potentially in place here. Has a smaller bounce that we just did. It's been sideways. Here's the high, here's the low. Entry right there, target 198. Stop, dollar below the low. No prior statistics at all right there. AWI, we've got this high, we got this low, we got this entry, and the target 206, the stop dollar below the low. Statistics 1553, and so don't really tell you any story for AWI. Bill Holdings. Yeah, see, technically we had the high up here, the low down here, the bounce, but this looks like a kind of a downtrend, so I probably wouldn't get involved. The last one failed. This one probably gonna fail. Boot Barn has been a beast the last couple of years. Beast mode. Here's the high, here's the low. And 216 target. 5 trades, 100%. Remember, less than 30 doesn't mean anything, but I mean, Boot Barn has been in a trending pullback continuation thing, so no reason to really expect this to not keep going at this point, unless their CEO just comes out and has all the company's money in a trunk and a couple dead girls or whatever, even if it's a lady CEO, and trunk full of boots and dead girls. So bigger picture, looking for this to bounce. Smaller picture, it picked up the really small bounce on this BV here. I'm not the biggest fan of this little bitty bounce here. It'd be a 14 target, and that's low price stuff. Lower price stuff, the stop is a bigger percentage, and there's less money that plays in stuff under 20 bucks. Big funds and stuff like that don't typically trade much volume in under 20 bucks, so I tend to stay away from those. Checking it out right here, we've got the high, we've got the low, we've got the entry, trigger, trend, pullback, continuation would be 43.50 right there, and stop down here, dollar below the low. DXC, there's the high, there's the low, and it's kicked off a couple weeks ago, really, and it just keeps churning. 16 targets, but this is low price stuff again. Statistics not the most banging statistics, and this has been sideways on FSS. Remember, if anything I say is helpful, beneficial, you're starting to get something here out of this, make sure you thumbs up, like the video, share with a friend, phone a friend, share. 120 target, stop is dollar below low. HAFC. This one worked out really nice last time. 24 trades, not 30, but we're getting close. 6 more trades, 70. It's real average, running just a little under the 75% average. Profit factor running a little better than the average. So this one's starting to prove that it's reliable. There's the entry, 31 target, HAYW. And got that high, we got this low, we got that entry, we got 17 target, HPE. We've got this high, we got this low, we got that entry, and 26 targets. We got this. I'm in HPQ, not in HPE. There's the entry, 342 targets. That was not bad. I mean, the profitable trades are light, but the profit factor a little spicier. This is statistically significant, so it does trend. Loses a little more often than the average, but when it works, it makes more money than the average. So, and when it loses a little less money than the average. So that's pretty strong on JP Morgan right there. And KNF, downtrend. Not the biggest fan of that one. We've got the high. We've got the low. Potential entry and 86 target right there. MAXN. Sideways chop. MCRI. Let me get through these so we can go check out the gamma and get that daily expectation here. Potential 102 on the upside. MMM. See, there's Rongamer in here. Yeah, I don't see him. So MMM. 178 on the upside. Watch for the retrace. Pack. And this was in it already back here. Did another secondary bounce. And this is low price stuff. Yeah. Pass. And I just realized that I don't even know how many people are on the stream. I don't have I have this whole dashboard. I have this like device. It's actually a physical device that shows me a bunch of statistics about the YouTube stream. I was looking for it. I was like, oh shoot, I don't even have it. So anyway, upside potential. If we can get above that, right there. And I wouldn't consider that an entry, but it picked up this little, like the tool I use to find these. Like I said, it's not very discerning. It found that little bounce right there. I would skip that. PIPR. Why go through ones that are no good? So that you can, hopefully, with the examples I've given, you can start to figure out which ones are nice looking and which ones aren't nice looking. Because you can find these bounces all the time, but which ones look good? This has a trend, pullback, continuation, except it didn't hit the target. Pullback, secondary bounce, 387 targets. Stop is always dollar below the low. RSVR. Oh, nasty, choppy. I'm not touching that. Ooh. My back. Uh-oh. Uh-oh. Y'all still there? Uh-oh. Uh-oh. All right. The internet went to zero. Like, everything was like, warning, warning, warning. I was like, uh-oh. It seems like it always happens when I'm on hotel internet. Anyway, I tried to use my cell phone, and it had even crappier service. So even though it had like 5 bars, it was like the speed was lower than the hotel. So I was like, I'll just risk it with the biscuit. 122 target here on SPMC. Just real average. Hey, there's Rongamer. Dude, the truck was a champion on the trip down here, man. Absolute beast. Merging through Atlanta traffic was probably the craziest freaking thing. And it even passed a Waymo, which I wish I had videoed that. It cracked me up. Anyway, it was like this Waymo's slow and just rips around it. It was the funniest freaking thing. Anyway. 81 target on this one. Hadn't really triggered it picked up this little high back here. On the tool I use, I would wait for the close above that bigger 618 for 81 target. 2673.8 net loser. Be careful on that one. SUI is a big list. I don't know why that one picked up at all. That one doesn't make any sense. Probably a different ticker it pulled up. got the high, we got the low. This has been sideways on United Rentals. 985. It's a little spicy. And the numbers don't look super awesome. VOYA. There's the high, there's the low. Entry 81 target right there. VSTS. Yeah, I've got like 96 or maybe it's 97% full self-driving miles now. I thought we're like, I'm getting close to 2,000 miles. There's the high, there's the low. Entry, low price stuff, $8 target. Stop dollar below low. WEX. There's the high, low. 167 target, 2160. Yeah, just there's not great stuff on here today. There's the high, there's the low. Entry 148, and ZGN. And that looks nice. Statistics don't mean jack diddly, but the pattern looks nice. Nice uptrend, pullback. We completed last time. Entry 1140 target, low price stuff, but be careful. That looks like an uptrend going on. Whatever the heck that is. Imlargiado. Yeah. All right, so let's go check out SPY. Yeah, the upload speed is what matters. My phone would only do 2 megs upload to the local tower, and the hotel was doing 10. Down, I could get 50 on my cell phone, but down doesn't matter for uploading live stream. So SPY, 15-minute. I do have the bull flow. Look at this, baby, up to 700. This is the best bubble we've had lately. Peeled back just a little bit there. So 697 looks like on SPY, down to somewhere around 683. 697, 683. Draw that up. Let's pull that baby over. All right, let's kibosh the watch list. Try to kibosh the Apollo statistics. Let's pull this over. So 693. Was it 693? No, 697. 683, 697. 683. 697, which is right in where it was, right there. And remember, everybody, there's no special deals. Like, I keep getting people asking me, there's no special deals. I don't trade for anybody. I don't have any, like, I'm not going to trade your money. I'm not going to ask you to open a brokerage account, any of that stuff. I keep getting people private messaging me, ask me, like, and I had people already coming up to me this morning asking me about the special deal I offered them. There's no special deals. There's no trading for you. It's a scam. If it's not a major broker like Tasty Trade, Thinkorswim, Fidelity, I don't use it. So there's no special deals, no special brokers. I'm not going to trade for you. Just remember that. All right. Don't get sucked into a scam. There's lots of scammers that pretend to be me. It's not me. And then levels out here for today. Ooh. I'm going to go with that 690. That one's pretty clear. It might be 691. 690, 691 is going to be the SPY level for the day. Let's go 691. And we could go, we can bounce top and bottom of the box, but 691 is kind of where I expect us to end up. Let's go QQQ. Read the tea leaves here. That one apparently didn't save from Friday. Save the setup. And pop back over, grab the heat map. QQQ. Those levels. are light. Wow. So look at 618 on the upside and 606 on the downside. 618. Wow, that's gonna be 618 and 6. What did I say? 606. Yeah, 607. Yeah, 606, 607. That's 606 is where it bottomed out this morning, so that's where I'd expect it to hang out. And then levels. There's no big levels at all on here. Holy. Oof. People aren't playing big tech. I guess the software as a service thing, just moving money out of big tech and into other stuff, and just not a lot of players. So somewhere around 612 looks like the balance point in here. 611 maybe, 610, 611. Let's go 611. So I expect this to kind of hang out right there all day. That's right in the 15-minute roadmap line. So that's kind of the, just looking at it right now, things will firm up as the day goes on. So, yeah, I mean, I tried to, I sat here and planned all this out before I went live. So I tried to make it like, I had this all up. I didn't have all the other things I usually have up, but I had this all up planned because y'all have said that this is one of the most helpful things I do to wrap up the show, is to give you kind of the levels and where I expect it to play all day. This is it right here for Qs and for the SPY. So that's what we expect here. And that's it. I'll be here in the live in-person event for everybody. I'll try to do 30 minutes of awesome tomorrow. And, be safe out there, everybody. If you're a Term Market Trading Lab member, the link is in Discord to get in the presentation with everybody. I should be on Market Masters with Jack here at 11:30. Supposed to be. We'll try. So we'll see y'all later. Bye for now. Bye-bye.